This is Scott Becker with the Becker Private Equity Podcast. We're thrilled today to be joined by your brilliant business leader. We come to you daily with short business episodes, short private equity episodes, interviews with fantastic leaders in private equity and business, and then a lot more. Today, we're joined by Paul Swaney. Paul's going to tell us about the Swaney Capital Group, the founding of that, and a lot more, and trends he's watching and investing, and more. Paul, can you take a moment and introduce yourself and tell us about the Swaney Group?
Hi, I'm Paul Swaney. Long story short, I started my career off in the U.S. Navy. I left the U.S. Navy in 2005, went and did a bunch of different operating roles from ConocoPhillips, working at refinery, worked at Amazon for a bit, and then I ran a stressed chemicals factory and distribution center and business in Southern California coming out of the global financial crisis. When I was there, I wrote a book on how do you put lean manufacturing and OpEx into a chemical plant where it normally doesn't go. Somehow or another, McKinsey & Company found my book and said, hey, we're starting up this group of ex-operators instead of newly minted MBAs. So I spent about 3 years there doing operations transformation and ended up working a little bit in private equity. And then got headhunted away, went over to a middle market private equity firm, Partners Group, and was the first operating partner there covering industrials, or operating partner in the Americas covering industrials. And then, hung up my own shingle in 2022. My dad was an entrepreneur. He owned a machine shop out in the backyard. And, I decided to take my own swing instead of going to work in another firm.
Amazing. And talk about, before we get into the firm and the focus, take a moment on being in nuclear submarine operations and discipline and some of the lessons that come from that as a background in the U.S. Navy. Do you mind taking a moment there?
Yeah, absolutely. So, the naval nuclear training pipeline, even for enlisted professionals, which I was, is quite long, right? So I spent 18 months in Goose Creek, South Carolina, first learning how to be an electrician's mate, second going to nuclear power school for 6 months, and then third going to what they call nuclear prototype, which is a reactor they basically start up and shut down every single day. What was put in my head there was that, operational discipline is absolutely paramount because you're dealing with things that can affect millions of people's lives for thousands of years if there's a mistake. I think back to the captain of the submarine I was on, and he had this message that just rang in my head: as a standard for diving the submarine is absolute perfection. And what he meant by that was every single valve had to be perfectly in place. Every single procedure had to be followed to an absolute T. And one of the things that's an overlap between like the Toyota production system and the United States Navy is that procedural discipline, right? Because when you're putting a car together, although it's not as much consequence as a nuclear reactor, everything has to be done perfectly so that the machine can operate safely. That's the biggest thing I took away from the Navy.
Thank you. And talk about some of the concepts that you talk about there seem to relate very well to the Swaney Group operating system. Talk about that means of doing business and how you think about acquisitions and how you think about operations.
So it's interesting, right? We're not chasing broker investments as an independent sponsor, right? We're looking for founder-led businesses in the manufacturing or industrial services space that were generally founded by entrepreneurs who tend to be very sales focused and less execution focused. Most manufacturing companies are actually started by sales professionals who think of manufacturing as an afterthought, or like engineers who come up with a new product and then have to figure out how to fulfill 1,000 of them. I was listening to Elon Musk on Rogan a few months ago, and he said, manufacturing is much harder than design. And I got a little warm fuzzy because making something 10,000 or 100,000 or 150,000 times is actually quite difficult to do cost effective. And so if you take those principles from the nuclear Navy and take those operational discipline principles and put them in a founder-led business that is much more focused on order fulfillment and sales, right? You can reduce cost of the business and, consequently make American manufacturing much cheaper. A little bit of an aside, one of the things that caused the big outsourcing wave in the 70s to China was that American factories were not run as efficiently as they could have been. It started as a labor cost play, but a lot of that volume can come back to the U.S. by applying these same principles, just like the Japanese did in the 60s, 70s, and 80s.
Fascinating. And talk about the areas of business that you're most interested in investing in, and then we'll talk about independent sponsor versus committed capital and how you look at that over the long run. But talk first to us about, where do you look to invest? What's of interest to you? You mentioned it a little bit, but go a little deeper there if you don't mind.
So I'm a bit of a chemicals junkie, right? So I ran a batchy chemicals business and plant, and I worked for ConocoPhillips on a polypropylene plant. I covered chemicals at the old private equity firm I worked at. So I mean that's going to be our key focus. It's the top priority of our 8 themes is specialty chemicals. I love the margin profile, things like flavors and fragrances, adhesives, coatings, and sealants, right? That's a very fragmented space. My more deal focused professional, Ben Novello, who's built up our tech stack, which I know nothing about. We just had a review 15 minutes ago. He's got 800 adhesives names on a list and is having outreach to the founders of those businesses. And that would be a meaty business if we just put 10 of those together. That's really what we're most excited about right now is aggregating an adhesives company.
And how much do you develop strategy based on specific focused, very disciplined focus versus opportunistic things that come to you? How do you differentiate those two ways of thinking? And it sounds like you're quite disciplined versus opportunistic, but how do you look at those two concepts?
Yeah, so when something hits my desk, if it's coming on a sim, not that I won't look at them or coming from a broker, I always take all the messaging with a grain of salt, right? It's been polished up and packaged. We tend to like to look at founder-led things because just intrinsically we know there's going to be a little bit more authenticity in the numbers, right? So what I like to underwrite is what I call a theoretical gross margin. So gross margin, as I was taught by my former deal partner, is just indicates a propensity to pay and a specialty, and how specialty versus commoditized the product is. So if we're looking at a business and the founders taking 35 to 40% gross margin, and then we go in and assess an operational opportunity that could get that up to 50 points, that would be very interesting for me to take a much deeper look at and really spend some money. That's when I'll start seriously thinking about getting the accountants in there and putting together a letter of intent.
Thank you. And when you think about independent sponsor versus committed capital, do you ever think about moving more to the committed capital world, or are you thrilled to be able to do independent sponsor work and not have to answer to funds that you've raised?
So it's interesting. It's, we're marching down, the independent sponsor path and, can stay there in perpetuity. At some point, I would like to have a fund of committed capital, call it a 5-position fund. So we've done the math on volatility and correlation. And it's, if we're only going to play in the industrial space and you're balancing what are the number of assets we can have dispositive control on, right? But if it's 5 is the right number, and I hired a math PhD to do the volatility curves over time on this, right? Because we're going to have one of our operating professionals at every single asset, right? I think there's some things to be desired from a committed fund that has 15 to 25 positions in it, and then an operating partner, 3 or 4 operating partners that each cover 5 to 6 assets. I think you can't really engage as deeply in that model. So our model is, and we've lost a couple LOIs on this, basically saying it's, our offer is contingent upon us having a permanently staffed Swaney Group Capital operating partner at the asset, right? So we believe that is what it takes to have dispositive control over a business. And so we figure if it's 150 million committed fund, it'll kind of have the shooting power of about 400 if you adjust for check size based on number of positions that are typically put in a fund.
And does your operating partner need to take the role of CEO, or could they be in there in some other role? How do you think about that?
That's a great question. I would prefer they not take the role of CEO. I'd love to equitize an existing president or CEO, and then put the operating team member in there as, you call them whatever you want, chief of staff. It doesn't really matter. Chief of staff, program manager, and learning at the feet of the CEO, who's the business expert at the size checks we're pursuing. That relationship component is going to be critical. It's the only thing we can't really replace is the relationships. And then augment that team to help bring in best practices and some of the Swaney Group operating system into the business, right? And then that CEO tends to be revenue facing, right? And then that person can worry about fulfillment and customer service and finance.
Thank you. And talk about it. You might have mentioned this already some. What are you most focused on and excited about this year? Where's your big focus?
So phase one was building out the team. Phase one was building out the team. Did that. We've got 9 professionals stateside. We got a professional in Colombia now and some external resources in India and Singapore. That's phase one. We got a part of what's called the Military Skill Bridge program. So I'm passionate about hiring veterans. I've hired 30 or 40 veterans since I left the military, and always had, lion's share has been very good successes. So building the team up there and supporting the veteran community. And then, we've got an equity stake now in a co-invest, right? My effort started out as an advisory business. We've got an equity stake now in an industrial services business. And then, we've got a business under LOI right now. And then I'd say the last thing is we went to the McGuire Woods Emerging Managers Conference and, kind of showed our playbooks and our systems off back in April. And it was the feedback we got was very positive. And, I was wondering what the reception would be to an all industrials fund versus more of like the middle market generalist. And it seems to be where the industry is headed.
Very much. I mean, people are very much looking at niche and specialty funds versus all-in funds, unless you're, of course, like the Blackstones of the world, which is playing a different game, the top 5 largest private equity funds. But in the middle market, very much people focused on niches and specialties and so forth, and fantastic. So you've had this great career, nuclear subs, McKinsey, now running an independent sponsor and also providing advice or advisory services. And it's fascinating because that's the typical sort of, there's a typical sort of movement from advisor to investor to, at some point, multiple investments and maybe a committed fund, depending on where you want to be at in 5 years or 2 years or wherever you choose to be. What advice would you give to evolving sort of leaders, CEOs, and investors? I mean, I know those are 2 different camps. What advice do you give to emerging leaders, whether CEOs or investors?
Make decisions faster than you're comfortable with. I found one of the opportunities for improvement in the private equity space is be less focused on what happened and how it happened and what you're going to do about it. And the theme on that is, if the extra data you're going to get to make the decision can't possibly change the decision outcome, there's no reason to get it, right? I continually tell my team, I'd rather you make 10 decisions, 3 to 4 of them be wrong and we have to correct, than you spend the same amount of time making 2 decisions and one of them is wrong anyway. You're going to get more done. Now, obviously, there's some things that take extra care and you have to identify those. But generally, when you're working with lower middle market to middle market companies, there's not a lot of things that are undoable, right? The pivot that Netflix made from shipping DVDs to streaming, that's a big strategic decision that takes lots of care. You got to get a team on, overanalyze it, go to it. Deciding to stock a new product, that's 50,000 in inventory, not the end of the world if you mess that up, right? Just move faster and you'll probably outpace the competition.
And so I think that's fantastic advice. And one of the topics that's come up so much the last few days is what somebody called 1-door versus 2-door decisions. And most decisions are reversible or changeable decisions, meaning a 2-door decision. You make the decision, you're not stuck for life. Obviously, you talk about low debt ratios. If you stack a crazy amount of debt on something, then you might have made a 1-door decision because you're locked in by that debt. But I think your point on moving quickly with urgency and a bias towards action is absolutely fantastic advice. Paul, where can people learn more about the Swaney Group?
Yeah, so you can find us on Twitter, Paul W. Swaney III, or Swaney Group Capital on Twitter, www.swaneygroup.com or paul@swaneygroup.com. Happy to take a call with pretty much anybody. Veterans plug, we'll have another skill bridge class of 3 to 5 skill bridge professionals starting in early Q1. I would love to have 3 to 5 more local Tampa Bay based veterans join our team.
Phenomenal. Paul, what an amazing job you're doing. Congratulations on the formation, the investing, the advisory work, and the work you do with veterans. Simply amazing. Again, Paul Swaney III of the Swaney Group, thank you for joining us on the Becker Private Equity and Business Podcast.
Yeah, thanks so much. Nice to meet you.